All right, today is Monday, March 31st, 3:30 section. This class is being recorded. So today, what we're going to do is we're going to take the Excel model that you turned in for the as-is valuation of BMW, and we're going to practice building 3 additional Excel models, a bull, a bear, and a target. That will set you up for your homework assignment next week, where either today, tomorrow, or Wednesday, I will give you another company, homework 10, which is due next Monday, to basically do the entire process by yourself on a different company versus BMW. So you'll turn in all 4 Excel models. You'll turn in probably the 4 screenshots, DES, WAC, EO, and probably the guidance. And you'll write the 500-word paper explaining your assumptions along the way. And this will become more clear as we go through the class. But today we'll finish up BMW, and your homework will be to do this yourself on another company. So in order to prepare ourselves to do that, we're going to kind of go through that. Last week, I'm sure some of you heard that I gave an extra credit point opportunity to the 2 sections for their live Zoom classes. I'm giving you an extra credit opportunity today to do something by 5 p.m. So under assignments, there is a new assignment today called March 31st in class that doesn't give you any instructions because it's extra credit and it's for only people that attend the class live. But it goes away at 5 p.m. So this is where you'd have to submit it. You have to submit at the end of class today 3 Excel files. No write-up, no screenshots, 3 Excel files, the bull, the bear, and the target, which we will create in class today for BMW. If you submit those 3 Excel files by 5 p.m., you get 1 point of extra credit. If you don't bother. Okay. So before we do that, I want to do a quick check-in on the Bloomberg Trading Challenge, because today's the day you need to be out of cash. So for section 101, I count, looks like all 6 teams have started to trade, and all 6 teams are below $300,000 worth of cash. So good job, section 101, that's 11 a.m. section. In the 12:30 section, section 201, all 6 teams have begun to trade. All 6 teams below $300,000 worth of cash, which is good. Section 301, the one that preceded this, which is the 2 o'clock section. All 6 teams have started and are below 300,000 in cash. And for your section, 401, 2, 3, 4, 5, 6 teams. And 1 team is in danger of being disqualified. You have 26 minutes. You're above $300,000 of cash. 300,000 means 300,000, not 300,133. If you don't buy something in the next 25 minutes, you will be disqualified.
What team is that?
What team is that?
G. Brady. That captain, G. Brady, right there. So that needs to be, starts with a 2, not a 3 or a 1. Too much cash. So 24 minutes. I'm sure somebody's in the lab. If he's not there, get his password and username. I'd hate to see your whole team suffer. All right. So that's kind of a check-in on the trading challenge. Any questions? Trading challenge so far?
Can you show the standings?
They're on the screen.
Oh, you're not sharing your screen.
Oh, I'm sorry. I thought I was sharing the screen as I was doing this. My apologies.
Yeah, it was due today at 10 a.m.
Let me share. I thought I was sharing. Okay, this is your section.
Thank you.
Yep. So the only thing I can tell you about the trading challenge, buckle up. And that's no different than what everybody's talking about in the real world. Nobody knows what's going to happen. Matter of fact, What's going to happen on April 2nd?
Tariffs.
Yeah, I think Trump's calling it Liberation Day or something crazy like that. So the global trade war goes to the next step. And we are pre-launching against everybody. So how that's going to affect the world order, no idea. Nobody knows. The market was kind of hoping that the guy would be rational and pull back, but he seems to be full steam ahead. So we're going to have to figure this out. And that actually affects companies like BMW that we're going to do the valuation on today. So with that in mind, let's go back to BMW. So I'm going to go back to Excel. All right, this is the as is model, which was your last homework assignment that you had turned in, which at the time last Wednesday had a share price of approximately 80.48 euros. And we had matched that in class to 80.52, but anything within a few pennies of that would have been fine for purposes of the as is. Obviously, we'd like it to be exact. Right? So this was, again, remember, this is half the company's value because the other half is owned by a family. But nonetheless, this was their share price as of last week. And so that's the as is. The whole point of the as is we know the share price. We created a DCF model that says this DCF explains that share price. It's not whether we agree with the share price. It's just we put in reasonable assumptions that explain the share price that we see. And we will do this for every company going forward. That's the first Excel model you will always create. Today, we're going to talk about the next couple Excel models. When these analysts are being hired by the institutions to give their opinions, buy, sell, hold opinions, an institution, if I'm going to put together a diversified portfolio, if you remember your academic classes, you need standard deviation, right? Without knowing the standard deviation, you can't put together a diversified portfolio. So what the analysts do is, in addition to giving a target share price, which is where they think the company's going to end up in the next 12 months, they give what's called a bull and a bear. Bull means, given these assumptions, how high can BMW go in the next 12 months if the more optimistic scenario comes true? And here's the optimistic scenario. Bear, how low could BMW go in a more pessimistic scenario if things kind of go really awry in the next 12 months? And that establishes a range. Okay, how high, how low. And that's very important for the analyst to give to the funds. And then, go ahead. Question? Sounds like somebody was talking. Then they will pick somewhere within that range to give their opinion, called the target, of where they think BMW will end up. And the target, by definition, needs to be between your bull price and your bear price. It can't be outside that range. So you gave a high and a low, you got to be somewhere in the middle. And the other thing I'll let you know is that that range is not necessarily symmetrical, right? So just saying plus or minus 10%, you're going to get a 0 in your assignment. That's waste of everybody's time. Okay. It needs to be really thought through as to what the bull is and what the bear is. And there might be more upside than downside. There might be more downside than upside. It might be a symmetrical range, but we don't just arbitrarily give symmetrical ranges. That is a meaningless thing from an institution, right? And they will stop working with you, right? So with that in mind, that's the process we're going to go through, right? And at the end of the process, once we do have our targets, that creates your buy, sell, hold opinions. Matter of fact, ANR doing the exact same thing the analysts are doing today with BMW. So if we go to BMW, you'll see their target share prices, which are right here, is where they think BMW is going to end up in the next 12 months. And what you'll notice is you got some really smart people here that have no idea. Like Bernstein came out this morning and said 92. Stifel came out a couple of days ago, said 84. Odo, I've never heard of, said 78. Barclays at 73.50. Who else? Deutsche Bank's at 100, Citi's at 78. Kepler Cheuvreux, Morgan Stanley's at 85. It's all over the place because that's the point. There's suddenly uncertainty. Or if I look at this, you remember last Wednesday in class, we had BMW at 84. Today they're at 74 because of this global trade war that the US decided it wanted to start. So ANR is the screen. I'm going to write that. Where the analysts are doing this. And so here's the whole point of the buys and the sells is that if you're more than 10% above the current share price, which today is 74, they're at 92, that's a buy. Right now, why Grupo Santander is saying neutral at 112, I just think they don't know what they're doing. But not every analyst is smart. But in any event, that might just be they didn't update their buy sell hold yet to reflect the target share price that they put in. But long story short, but again, if you're 84 and 78, then you're basically a hold. So the general rule of thumb is if you're within 10% of the current share price, when you do your target's within 10% of the current, that's called a hold. If your target is more than 10% above the current share price, that's called a buy. And if your target is 10% below the current share price, that's called a sell. That's kind of how they do the buy sell holds. So let's start that process with BMW. So what we're going to do is we're going to take our as is file from last week and we're going to go file, save as. And I just want to make sure that the recording is still going. Yes. And I'm going to take this and I'm going to call this my, this is going to be my bear. I'm going to start with the bear, more pessimistic scenario. And this, all right, whoever's in the background talking, can you please mute yourself? Because it's coming through on the video as a lot of static.
Excuse me, did you add or duplicate the file? Sorry.
I took the exact same file and I just renamed it and saved a second version called the bear. And I added the word video because I'm recording on the video, but you don't need that, just the bear. Okay. So the whole point of the bear is I'm now saying, all right, in the next 12 months, how bad can the share price get and for what reasons? So ideally, you want to do a full EIC on the company. All right, I'm not going to do, we're doing too many companies do too many EICs, except for maybe your group project version of this. But here's at least minimum. Go to the BICO. Because that's going to give you kind of some of the pivot points of the things that are going to affect the company. Remember, the BICO is the analyst curating the summary of all the analyst reports. What's going on with the company as of today? And you just kind of start to scroll through here and you'll read this ideally, because this is going to tell you what's going on with BMW that they're worried about. So for example, the tariffs, 25% tariffs on global autos in the US. And the whole point is that Trump is serious about punishing the Europeans and it's going to apply to BMW and that's going to hurt their margins and probably their sales. So number one, margin hit, right? And basically pre-tariffs, pre-Trump, they were saying 5 to 7% is what their EBIT margin would be. Now 6.3 is probably more realistic. So margins are going to go down with the tariffs and sales are going to go down. So that's going to affect our bull and our bear. Another one is BMW's made a big bet on electric vehicles. And if the US seems to not care about electric vehicles anymore, like Trump doesn't like them, except for Tesla's apparently, because Elon Musk gave him a lot of money, then that might affect BMW's electric sales in terms of their success. Another thing that's going to matter is China. If you want to talk about electric vehicles, they now have BYD, which is the largest electric vehicle maker in the world that makes pretty good cars at much lower prices. And how does that affect BMW's global competition? And do consumers want electric vehicles, or are hybrids going to be more valuable in the short term? So those are all things that are going to affect how we think of the bull and the bear, and the tariffs on the supply chains. What's going to happen to costs and regulatory, the pushback and the fights, that retaliations, how does that affect them? And then you kind of go through here. The fact that they're a premium product, BMW's margins are not reflecting the premium margins. So is that like going to change over time? Again, a difference potentially between a bull and a bear. Reach. China's a big deal. Their margins are lagging some of their peers. So as I said, you kind of go through this and kind of get some of the issues that are going to be our bulls and our bears. The other one is the industry dashboard. We all know from our certification, BI, Bloomberg Intelligence, is the industry dashboard. When you go to BI, you can search for an industry, in this case, auto, and go BI AUTP or AUTM, manufacturing, automobiles. And then read the industry primer, particularly for North America, and then the global one, because these are other issues that are going to affect how we think the context. So when I say write 500-word papers, I don't expect you to say, oh, I think the revenue growth rate is going to go from 2% to 3%. That's just a zero. It's an insult to the TAs and to me, and we will give you zeros on the assignment. All right. So when we say write 500 words and explain your rationale, you're going to basically be talking about this, what's on the screen on the right, and what the real world issues are that are leading you to change those assumptions. So that is true from everything going forward, right? So again, you kind of scroll through this and you can see that there's some polarizing capital strategies, meaning do they spend more money on electric vehicles? Do they spend less money on electric vehicles? What kind of plants do they build? Where do they build them? All right. The regulatory environment. We don't even know in the US who the regulators are anymore. They keep getting shut down, fired, and changed. It's a crazy regulatory environment right now. And the rules are constantly shifting. So just things that are going on in the market in the last 60 days are changing everything. And the market doesn't like uncertainty. And unfortunately, a lot of uncertainty, which equals higher cost of capital, by the way. So again, you can kind of see, some of the things decline in sales based on weak demand because you raised prices 25%, people buy less cars. You get a $60,000 car, and suddenly it's a $70,000 car. People are going to buy less of those cars. So demand's probably going to go down, right? Costs are not going to be able to be passed along. Matter of fact, Trump has threatened the US automobile makers. He said, if you raise your price with these tariffs, GM, Ford, Stellantis, I will retaliate against you as a company. And we've seen that he's retaliating against people. He loves to retaliate. So he's threatening the auto industry, which means lower prices and lower sales. So how does that affect BMW? Because they make cars in Spartanburg, South Carolina. Are they a US automobile maker? They're a German maker. Because the X5, which I drive one, is actually made in the US. So again, it's complicated. And that's the fun part of this. If you kind of take away all the horror that's going on in the real world, like there's just a lot of opportunity here. Delinquencies, people buying cars are now having trouble because we made an assumption that interest rates are coming down. Interest rates are not coming down, and car rates for car loans are going up. And they're getting harder and harder to come by because more and more people are delinquent in their loans. And so the banks are starting to become more stingy about lending money out for these higher priced cars. So that's another problem, which could crimp sales in the short term even more. Right. And so, discounts, how much they have to discount to get this cost of the lots, just a lot of stuff going on. And that's just BMW. Right. So that's the point. You got to do some work and you got to do some research on the companies. You can't just do this as a numerical exercise. So ideally not fully IC, but at least read through the BI and the BICO. The industry primer, company primer. Questions? Right? Why that kept getting overwritten. So now I'm in my bare file. Don't overwrite your as is. And I'm going to start taking those things that I just learned. I'm going to start putting into this model. Now, there's a lot of things that I need to change, but I'm going to kind of focus on the ones that are most important. So first assumption in my bear, I don't think the German tax rate is going to change all that much. So 25% seems reasonable in all the scenarios. So I'm kind of probably leave that alone. What is going to change? Growth rates and EBITDA margins. Those are definitely going to change. And here's where it gets interesting. Normally, in the world before Trump, so the actual world for the last 20 years, except for the last 60 days. So we get last 20 years, got last 60 days. Last 20 years, these revenue growth rates were pretty consistent over time. We didn't have to worry about them in the short term going too dramatically different than what the analysts were doing, you know, plus or minus a couple of percentage points. In the last 60 days, these revenue growth rates could change dramatically based on what Trump is doing, trying to fight the whole world. So here's the point. Originally, we were just going to have these EEOs. I think the analysts are still trying to figure out what these are going forward post April 2nd. We're going to just directly make some changes. I'm going to re-yellow these. Not normal. Okay. So what do I think is going to happen to revenue growth in the bear scenario? 0. No growth in sales for BMW for the next 2 years. And beyond that, tepid growth, 2%. So when I put the context together, I think that the trade war, the higher prices because of the tariffs, the challenges with the supply chain because of the tariffs, and the harder to get financing because the higher interest rates that we are facing is going to put a crimp on BMW sales in the short term. And they are not going to meet the sales targets that were in the EEO last week. And that is part of my bear scenario. And that is part of my 500-word write-up when I'm explaining what I am charging in the bear. But more importantly, you'll notice when I changed those 5 years from 22 to 29, that share price didn't go down all that much. Right? What's going to matter most is perpetuity. Okay? Because remember, you see this in the DCF. In any 1 year of BMW's $140 billion worth of operating value, 31 billion is the first 5 years. So if I knock out a couple points of sales, what am I knocking out? Like $800 million worth of value? Like that's not going to have the huge impact on BMW. It's the long-term G that's going to have the impact on BMW. And in the long-term G, right now, we don't have any growth. I still think long-term, they're not going to have any growth. And I'm going to say that as part of my assumptions. And the other thing I'm going to say is I think the margins are going to be lower across the board, right? We had perpetuity margins at 12.5 when we solved for it on Wednesday of last week for this week's homework assignment. I think it's not going to be 2030 before they get the 12.5. I think with the tariffs and the extra costs that we just identified, they're going to get 12.5% EBITDA margin this year. 12.5. And I think it's going to stay at 12.5 all the way through 2029. I think they're going to just get lower margins across the board because they're going to have higher costs and they're not going to be able to pass those costs on to the global consumer. And I do think that the perpetuity margins are now going to be slightly lower in the bear scenario at 11.5. I didn't do this in the last class. I'm not going to do it in this one, but more advanced. I think in the short term down here, I think they're going to have an inventory problem. I think they're going to end up with a lot of cars sitting on the lot because suddenly when the prices rise, people are going to stay away from showrooms. And eventually those cars are going to have to be liquidated in order to get people to come back at lower prices and lower margins. And so if you wanted to get advanced, you know, you might change that to 25% in the short term. Okay. Now, I did not do that in the last class. So just to be consistent, I'm not going to do it in this class, but inventory is probably another issue I would have changed in my bear or should change in the bear. So actually, I'll leave it in this one since this is on video. They can watch this video. But I do think, but I don't think it's going to be long term. I think it'll get resolved by next year. So we'll go back to 17, which is where they were. That's still, it'll still hit them a little bit, about 50 cents a share from the inventory standpoint. It's going to spike likely because of the lack of consumer demand and the immediate price shocks of the tariffs that are going to be hit next week, starting April 2nd. So that's my bear. That's my rationale. That's what's starting my 500-word paper. And that is file number 1 for extra credit if you're doing it. Now, your extra credit doesn't have to be exactly 57.45. It's just to be directionally correct in that range. But that's the first file you would need to submit by 5 p.m. today. Called the bear. So downside for BMW, 57 euros a share in the next 12 months for the reasons that we just mentioned. Questions? All right, so you save that file. Then we close that file. And we go back to the as is. This is our as is from last homework assignment. Back at 8052. File. Save as. Bolt. This is our bolt. Now, I put on my optimistic hat, right? So I'm looking at through more rose-colored glasses. What could go right for BMW in the next 12 months that could drive its share price higher? Well, one of the things that could go right is that, you know, all the firing at each other with these global trade wars, people realize it's futile. It doesn't really advance anything. And we pull back. That Trump's like, all right, I made a mistake. I shouldn't have done this, fight the whole world. And maybe we do this in a different way. They pull back because that's kind of what Wall Street thought was going to happen until about 2 weeks ago. And so basically he pulls back and the tariff war calms down, right? And that means a lot of the bad things we just talked about don't actually play out. And that's part of my bull scenario. And that BMW is successful in China, even against BYD, because they've had a successful brand with traditional and hybrid cars. And maybe that brand carries over to electric vehicles and they have some success there. China was a big market opportunity for them. The other thing that might help is that the supply chains are not seeing the higher costs and then inflation starts to come more under control and then interest rates come down a little bit so that we don't see the big spike in average car prices and it isn't so hard for consumers to buy these cars. So it doesn't affect the revenue growth rate as much. And to be honest with you, in today's world, the revenue growth rates we had last week seem more like the bull scenario. So even a lot has changed in 7 days or 5 days. So I'm going to actually say these revenue growth rates do represent the bull scenario. The only thing I might give them credit for is in the perpetuity period. And that's really here, the CVG, that BMW does grow 1%. I don't think they're going to grow 2 to 3. I think the whole auto industry is constrained, but BMW is an above average company with a premium brand globally, with still expansion opportunities into other markets outside of North America. I do think that they have some long-term growth opportunities. And so I'm going to put their CVG at 1%. Okay. And so I don't think the tax rates are going to change, right? And I do think that the margins are going to stay probably, where they were, not go higher. Again, I'm now calling that the bull scenario, and stay closer to 12.5 for the long term. As a matter of fact, what might end up happening is that maybe they get to, in the long term, in a bull scenario, closer to where they've been historically in the 13.5 range. So let's say that they actually maintain their margins long term. They don't see the decline, because they're a premium brand. And they've consistently made these margins over time. Look historically for the EBITDA margins, right? So let's say that they don't see the perpetuity drop to 13 and a half. So my bull scenario says BMW worth 99.4 euros. And I'm going to save this as my, and I explained to you the reasons why I changed it. And that's also my 500 word paper.
I have a question.
Yes.
For revenue growth rate in 2030, the 0%, why did
can
we
make that
not?
You can make
Okay,
that one.
should we
And
connect that to?
But the only 1, 2 is not going to matter much, but make it 1. But here's the point. This is just one of these. What's going to matter is the G, which drives this. So the 2030 is going to be 3 billion. So it's 1% on 3 billion. The G is 1% on 144 billion. Compounded. So that CVG has a lot more impact than that 2030 rate. Just FYI in the model. But yeah, I should have changed that. So I'll make that 1%. Good call out. But the one that does matter in perpetuity is this is the perpetuity EBITDA margin. This is the perpetuity tax rate. So this margin matters much more than these. That's why the stock price went up so dramatically. When this was 12 and a half. Oh, that was appreciation. Sorry. So when this was 12 and a half, we were at 80. When this was 13 and a half, we're at 100. If I made this 12 and a half, it's 1 euro. So that perpetuity margin is a bigger leverage point because just go back to our DCF. What's going to drive the perpetuity? It's right here. Growth, ROIC. What's driving the ROIC? The EBITDA margin. Good question. Other questions? All right. So at the high end, my bull, I'm telling the institutions, BMW could trade as high as 100.66 euros for half the value of the company. Remember, the owners own the other half, the private family. But publicly, they could trade as much as 101 euros a share in the next 12 months for the reasons that I outlined. On the other side of the equation, BMW could trade as low as $57.45 for the reasons that we outlined. And so there's more downside risk than upside risk to BMW. And I think that's realistic. So that's what I mean. It doesn't always have to be symmetrical. Like a company could be near its peak. And so the bull doesn't have to be 20% higher just because you want to put 20% in. Like BMW, I don't think has much upside. I think it's got a lot more downside. And that's the value when you're talking to the funds and they're thinking about their risk and diversifying their portfolios. So you got your range, your bull, your bear. This is file number 2. Yours doesn't have to be exactly 100, but it's got to be higher than 8048. And you had to make a few tweaks in here for the extra credit. Questions? The chat here.
Can you
But
go
did we-
back to the assumptions page on the bull?
You're not submitting a word
Correction.
file for the extra credit. You will be submitting a word file for homework 10 next Monday. Sorry, go back to which one?
The assumptions page on the bull.
Assumptions bull. Sure. The big change I made, the assumptions on the bull, was right here. The 1% G.
Thank you.
Because that G, 1% compounded forever, 2% compounded forever, 3% has a big impact. So, because that's forever and it's compounded. Whereas just a 1 year is just a 1 year. But this is the perpetuity G. So it's going to have a big impact on any valuation, which is why we want to be reasonable with that number. You don't want to just say 6. Actually, 6 is higher, can't be higher anyway. 4. If I went to 4, my share price would be like 136 a share. So it gets to be a very big leverage point. Other questions? Let me go back to one. I got my bull, got my bear. Now, file number 3, save this. File, open. The as is. Rename the as is, file, save as, and this is called the target. The target is your opinion. The only thing I can tell you about the target is it's got to be between the bull and the bear. Because the bull establishes a high, the bear establishes a low. That's the range. Where in the range do you think you're going to show up? I was telling the last class, like a couple years ago, I had an MBA student who actually submitted a target higher than their bull. Got a good laugh as I marked down the points, but like, that's not the point. But the bull's the best it could be. The bear's the worst it could be. The target is in the middle. Where do you think they're going to end up in that range? Okay. So now you can put in your opinion. And as I go back to Bloomberg, there is not unanimity about this target. And that's the point. Like, nobody knows. There's a lot of uncertainty. And there are some targets which are much lower, and there are some targets that are much higher. And there's some about where they are today. So they're all over the place on Wall Street. So we got to figure this out. Like, what's our opinion? Where do we think they're going to be? Right. So we kind of have some underpinnings, a bull and a bear, and then we can kind of put it in. So Joe's current opinion is I'm actually thinking that it's probably a little bit more downside than upside with BMW versus the 80 euro share price in a year. Because what I think is going to happen is I don't think they're going to have much long-term growth. What I do think is that, as I said, I think these revenue growth rates are closer to the bull of what they were expecting last week. And I think that is probably what they're going to hit. I do think they might grow a little bit more like in that year. But where I really think that they're going to struggle is in the long term. I think the margins are going to be lower. So I'm going to yellow these. I like that I changed them. And I do think that BMW's EBITDA margins are going to start to fall. This year, I do see them hitting 12.5 for at least the next 2 years. Wrong cell. 12.5, 0.5. Why is it jumping down the cell? Sorry, keyboard problems. 12.5. And then I see it going back to 13. And 12.5 in perpetuity. So basically what I think is that the trade war will hurt a little bit for a little while, but I don't think it's going to be as bad as people think. Because I think that the countries, starting with Trump, will start to pull back. And when he realizes all the damage that he's causing globally and to the US markets and to US unemployment and other things, because you're going to see lots of layoffs in the auto industry coming up. But essentially, and then nobody's buying cars, which makes it even worse. And you see dealerships going under. I mean, it's when all that starts to hit front page news, he's not going to keep going with this. I hope there's some sanity there. So 12.5% EBITDA, they're going to take a hit. They'll recover a little bit. I don't think they're going to recover the levels that they had originally thought. And long-term might be a little bit tougher as the markets just gets more competitive, but that's still a 77 euro share price. So given where we were last Wednesday, that would be a hold. That would be file number 3 that I would submit. That's my target. So if you want the extra credit, you need a bull, you need a bear, you need a target, you need to submit it by 5 o'clock. There's no write-up. It's just an in-class exercise. But it's a process practice for what you're going to do for your next homework assignment. Questions? Other
Can we see
questions?
the assumption type?
Which file? The target?
Assumption. Yes.
I didn't change this. I left it alone.
Okay. Okay.
And I would say that in my paper. I left it at 0. I don't think it's going to be all that different than the current view in the as is. But the whole point is when you do each model, you got to explain real world context, why you're changing what you're changing. And you'll notice that what I'm changing is kind of limited because it goes back to what's going to be impacted. The G, you could make an argument for the WACC. We usually don't change the WACC, but you could. And the ratios are these three in gray. Again, you could change the inventory levels or balance sheet, but if you didn't, not going to hold you to it for this assignment. By the way, since we were here, as I showed you, graph price last Wednesday. Here's the last month share price. Their share price was here. This is last 84, 82, 84 time. And then now it's at 74. Straight line down. That's what also makes me a little bit more pessimistic, is the market is trending in a pessimistic way towards what's going on. And that's not just BMW. That's why the markets are down so much. All right, again, questions, comments about any of this? All right, so get those files in. No write-ups, no screenshots for this extra credit by 5 o'clock. You're going to be using all these files in this process to do next week's homework assignment. So sometime tonight, tomorrow, Wednesday, I'm going to figure out another company for you to do, to value. And so you're going to have to use this model to basically get that data. So I'd say go back to your, save it. The as is. So this is your last as is. Now we're going to use this as is to do another company. Okay. So let's say I gave you, I'm going to make up a company, Pfizer. All right, go value Pfizer. So what you would do is you go to Pfizer. And then you're going to need to go to FA. FA is historical data. Now, on the left here, this full screen, this worksheet, model data, which came from Bloomberg, is the raw income statement, balance sheet, and cash flow data that makes our model work. And this raw data creates these standardized income statements and balance sheets, which is how we do our valuation. So we basically have to replace this worksheet with Pfizer's data. So that's where FA comes in. You'll go to custom. You'll create a custom worksheet. Custom. Create custom. Now, in Bloomberg, when you export a file, column B is hidden. But these in column B are the Glengarry leads. These are the actual database field names, which can never change in the Bloomberg terminal system. If one of these ever changed, it would just cause an earthquake on Wall Street, and Goldman Sachs and Morgan Stanley and JP Morgan would be in pitchforks revolting against the company, because for 30 years, they've been relying on revenue to always be in a database field called sales rev term. And so it would break so many models around the world. So they're not going to change these. These are the core database fields. But Bloomberg also allows for what they call the friendly name. So for example, for BMW, sales rev turn is called revenue. But for a British company, it might be called turnover. Okay. So column A is the friendly name, column B is the database field name. What you're going to have to do to reuse this model is you're going to have to recreate all 82 of these 80 or so fields in this exact order in a template over there in Bloomberg. And you need a 6 years worth of data. So in order to do that, you're going to need to go, once you're in FA, go to the FA settings and make sure your number of periods says 6. It defaults to 10. If you put in 10 years into this model, it will break the model. It won't work. If you put 5 years into our model, it will break the model. It won't work. The model expects 6 years of historical data. So you want to remember to change it every time. Settings under FA, 6. Then where it says data in the next tab over, make sure none of these extra data boxes are checked. If they are checked, Bloomberg will insert extra columns. And our model does not expect any other extra columns except 6 years of historical data. And so if you put in extra columns, it will break the Excel and it won't. So none of these forks can be checked. And periods 6, and then update. Every one of you has to do that. Then simple process. Because I know this is the field that can never change. This is the one I want to do. Starting with sales rep turn. Copy is the easiest way to do it. Here where it says enter field, paste it, select the first one down. Hover over it, Excel field ID, sales rev turn. Next, I need cost of revenue. That's the database field. Good luck trying to figure that one out from cost of revenue. So watch what happens. If I type in cost of revenue, right? New. Which one of these costs of revenue do you choose? That's the problem. Do I choose cost of revenue adjustments, cost of revenue adjusted, ARD rental? Probably not. But the problem is there's more than one cost of revenue. So using the friendly names can be a problem. This is the actual database field for cost of revenue. Copy, paste, select. Repeat that 78 more times. You need the fields here in this exact order with those exact field names in a template. Now, I will warn you that you're going to run into 2 fields where you will do this and it won't be able to find it. They're there, but it won't be able to find it. I don't know why you can't find it. I've reported this to Bloomberg now for several years. When you run into that situation where you type in the database field name and it can't find it, put in the friendly name. Put in this and it will find it. It's just a bug. It's a bug in their system. And they haven't fixed it yet. So I'm just letting you know as you go through this. There might be 2 fields where this doesn't work and you'll still have to find them and put them in. And then just make sure that when you do put them in, it should still have this database field name. All right, when you have finished this process, save this as a template. Save it. Mine is called model. So there is all of Pfizer's data that exactly matches our template over there on the left with the exact order. When you have that 6-year template, export to Excel the template. And basically what Bloomberg will do is it will dump all of that data into Excel. Okay. Now, this part is very important. Notice here that my version of Excel has an add-in called Bloomberg. If your version of Excel that you're using in the lab does not have the Bloomberg add-in, this will not work. You will not be able to export data. It will just error out. So you have to have the Bloomberg add-in for Excel. So what IT has done, for better or worse, is if you're in the lab right now, on the start menu, there are multiple versions of Excel loaded in the lab. The default Excel is vanilla Excel, but there's another Excel on the menu that says Excel with Bloomberg. You need to load that first. Excel with Bloomberg. Because if you don't load Excel with Bloomberg, the add-in will not load. And when you go to the export, it won't export. If you load the
I just have a
Excel
question.
Bloomberg first and then you export it, it will export correctly. Yes.
So is the Bloomberg with Excel only available in the Bloomberg terminals, or can we get that
Nope.
on?
No, it's only in the terminals because that Bloomberg with Excel is actually tied to the Bloomberg account on that machine.
Okay, gotcha.
So what's the cool feature of Bloomberg with Excel is that you actually don't have to work in Bloomberg. Like I can actually build models in Excel and have it pull real-time data from the terminal without ever logging into the terminal. So I could just open up my Excel model every day and I know that the most recent data is there. So it actually is great for automation. But unfortunately, you still have to have a terminal. So I'm logged into a terminal. That's why it would work. If I were logged out of the terminal, even with the Bloomberg with Excel, well, it wouldn't pull the data. I need both open. If that makes sense. So that's a little tip. Second tip, this 6 years of data that we just exported, notice here, looks a lot like that, should, except if I click on 4905, it's not 4905. It's a database field lookup. These are not numbers. So if you save this file and you leave the lab or you turn this file into Canvas, garbage. When the TAs open it, it'll have nothing in it. It'll be all errored out because in real time, it's going to be looking for the Bloomberg terminal. It won't find it and it will just error out. And you're not going to get credit for your assignment with a bunch of garbage. So what you're going to have to do every time that you export data is you got to turn them into numbers. The way you do this is you select the entire sheet, you copy the entire sheet, and you paste special values the entire sheet. That will then turn every one of those formulas into numbers. Now, if I save this file, it will work anywhere, including outside the lab, because now I have numbers. And that's just a process you're going to have to do every time that you export data for your models. Second thing you got to do is you see these long dashes? Excel will not handle a reference formula with a long dash. It will error out. So if I were to import this file into BMW, it would break the model and it wouldn't actually add up. So I got to get rid of the long dashes and change them to zeros. And again, I've been asking Bloomberg for years. I was like, why do you use long dashes if you don't have data? Just call them zero. And that's the point. They're like, well, because we don't have data. And we want to signify since we don't have data, we treat it as a zero, but we put in a long dash as opposed to a zero, which the company told us. Whatever their black box reason is, these are basically zeros. So what you need to do is you need to, once you turn them into numbers, copy a long dash, find a long dash, paste the long dash you want to find, replace it with a zero, and then replace all of them. So there were 37 long dashes, which have now become 37 zeros. Once you do that, file, save as, and I'll put this in my downloads folder. This is my Pfizer data. Okay. So part of the reason I have two windows here is the window on the right is a PC using Parallels on my Mac. The windows on the left is my Mac. It's two different versions of Excel. So I'm going to close this version of Excel. And I'm going to open the data file in my Mac version of Excel. And the reason I can tell you that it's my Mac version of Excel is if you look up here, there's no Bloomberg added. Bloomberg added doesn't work on a Mac, right? So long story short, that's the file with all the replaced zeros. So I have my Pfizer data that I've exported. I select the entire worksheet. I copy the entire worksheet. I come in here to my BMW file. I select the entire first model data. I paste special values. And now all of the BMW data has been overwritten with 6 years of historical Pfizer data. This is now my Pfizer model. So file, save as BMW model. This is now my PFE model. So for example, this is now the Pfizer ROIC tree. Right. Very important, check that your CFI balances. If your CFI does not balance, then you have a problem. What it means is that Pfizer has something on its income statement or balance sheet that's not on this list. That's why it's not balancing. So what we would have to do is figure it out. We had to figure out what is missing. And then at the bottom of our model, add it and re-export it and put it back in. The company I choose for you to do your next week homework assignment's going to balance. Right. But this is what I was referring to a few weeks ago, is that sometimes you just go through these companies and these companies add some crazy item that the accountants came up with that's non-standard. They throw it out there. And unfortunately, if we don't pick it up, our models won't balance. So I got to figure out what that is. And usually what it involves is a little bit of playing detective. So we would go back to, simplest way to do it, go to the balance sheet or income statement and look for something that was 281 starting in 2020. And I'll bet that that's the line item that they added. Just look at the balance sheet to see if there's something that's 281 on here very easily pops out at me. Not on the balance sheet. What about the income statement? Because it was 2020. It's not the asset write down. I think it picked up that one. 31 and 410. Anyways, so it might be a combination of several things that they did. But the point is we had to figure out what it was, fix it, and then re-import it. That's the advanced part of what we have to do. So I'm not giving you Pfizer, but make sure your CFI balances, right? And it should for the assignment that I'm going to give you. Then we'd start updating these numbers. This is BMW's WAC. Needs to be Pfizer's WAC. This is BMW's G. Start at 3%. This is BMW share count. Put in Pfizer share count. This is BMW share price last week. Put in Pfizer share price. These are the revenue and EBITDA for BMW. We need to put in the revenue and EBITDA for Pfizer. These are the tax rates for BMW. We need to put them for Pfizer. If I made changes in any of these, make sure that hard-coded changes don't linger, like 12.5%. So we'd have to adjust the model. That's what we're going to do as a full practice on Wednesday. Okay. But that's going to be your homework assignment for next Monday. I'm going to give you a new company. You're going to download the data for that company into your model. You'll all do this individually, and you'll need this template because without this template, you won't be able to do the future homework assignments. So you have to create this template. Create it once And that's the point. Here's Pfizer. Here is, I don't know, pick a random company, ExxonMobil. This is why I told you company number 2 to value 10 minutes. Because once I have my template set for, it's my model template, then there's all the data in the format I need to value ExxonMobil. So whatever company we can use with that template, we can quickly overwrite into our data. The only sad part is if you actually had your terminals at home, we could automate it even further, where you just typed in the Excel, the name of the ticker, and everything would just auto update in the Excel. But in order to do that, everybody would have to have their own personal license to Bloomberg at home. You don't have that. You have to be in the lab. So that's where the copy and paste is coming in. So you don't have to do this today, but you're going to have to do this very soon because you will not be able to complete homework 10 without being able to do this. So my recommendation, do it at least before Wednesday because you're going to be in the lab on Wednesday and you're going to need to get all your data on Wednesday during class time. So as I said, I'll post the company that you'll need, and you're going to need this model data. You're going to need the DES screenshot for that company. You're going to need the WAC. You're going to need the EEO. And you're probably going to need the guidance. And if the guidance doesn't have the tax rate, then you're going to have to get the BRC report. So you will need to use Bloomberg going forward. All right, threw a lot at you. This has been recorded. Questions? Questions about anything?
I have a question on the Excel file. What's the difference between the continuity revenue growth in 2030 and the assumption growth on the tab?
This is a 1-year growth rate. This is the perpetuity growth rate.
Okay, so we don't use that last year as
I'm saying you can do the
perpetuity?
last year, but changing the last year, like if I made this, well, I'm in Pfizer now. So it's going to be different than BMW. But let's just say I made it 4%, like versus 3. It's not going to have very much change in that share price because it's just a 1-year change, right? Whereas here, if I change this growth to 1%, well, then that becomes much more dramatic, or 2 or 3 or 4 or 5. So essentially the G, because it's compounded forever, where the 1 year is not, it's just a 1-year growth.
Yeah, thank you.
Sure. But the other one that does matter, back to ratios, this is the perpetuity EBITDA margin, which drives the net flat or the ROIC in perpetuity. So that one does matter. Cell M4. And this one matters because this is the tax rate in perpetuity. That's M7. This is a 1-year tax rate. This is a forever tax rate. Good question. Any other questions before we wrap up today? All right, so again, TAs will have office hours this week if you need help. I'm not giving you any of these models. You have to have created all of this yourselves. That's why it was so important to complete the last homework assignment correct. Right? You have to create the ability to export 6 years of historical data from Bloomberg, those templates yourself. Without that, you're not going to be able to do these, right? And you're going to have to take the screenshots yourselves for all the assignments going forward. And again, I'll list all the required screenshots. And I'm going to figure out later today or tomorrow which company I want you to do next Monday. Okay. Other than that, this has been recorded. The recording will be there shortly, and I'll see everybody on Wednesday.
I have a quick question.
Yep, go ahead.
Do you know when the first half of like the Bloomberg Trading Challenge is going to be put on ELMS?
Yeah, I'm just behind. I was
Mhm.
not for 5 days.
I also have another quick question.
Yeah.
Could you show me what you put for like what value you changed for like the target model?
Yeah, let me get on.
I know it's like has to be between like the
Yeah, my target was pretty close to, let me open it up here. BMW target. Which one were you asking about? What I
The
really changed,
target.
I made that 2%. I did change some of the
Mhm.
EBITDAs a little bit,
Mhm.
and I changed, I didn't change anything here.
Mhm.
Kind of
So as
changed
long as like
the growth rates a little bit.
all right. Thank you.
Because I actually thought, my personal opinion is that BMW is about worth what they were last week, which today is upside. But I thought that they're still going to have a tougher time long term. So my target wasn't too different than where they were trading. That was just my point of view. Now I could be wrong. That's the beauty of this. We're talking about the future, and there's different futures. I mean, on Wall Street, you saw the analysts were all over the place on BMW. So a lot of uncertainty. So not that any of us will be right or wrong, but it's the process that's the most important. That you guys come up with a process that's reasonable to follow, and it's somewhat fact-based. Context matters.
Mhm. Professor, could you show which your end what it says for the trading challenge? Because our team got under 300,000 cash and we have a screenshot of it. We don't know why it went back up.
No one was disqualified
Okay.
for the first half.
Okay, thank you.
Yeah.
Oh wait, no, I was talking about the second half that just started.
Oh, so let's look at Tim. Did you buy something today?
Our team leader had bought a bunch of stuff a few days ago and it went under 300,000 cash, but you said it was above. So
I'll
then
show
he
you what
bought one more.
this is what I'm seeing. So section 401, available cash. All right, they must have bought something while we were talking, because it's under 300 right now.
Okay, thank you.
So whatever G Brady did, they did it today. The extra buy today. I don't want to click on it to see what they bought, but everyone's now good in this section. So thank you, whoever did it. Any other questions?
Could you also show what you changed in the bear market?
Sure. The whole point of the bear was the idea that because of the tariff wars, growth is going to be lower, margins are going to be lower, costs are going to be higher, and China's not going to be as successful, and they may not have as many electric vehicle sales as they expected. I mean, those were really the key assumptions behind the lower, and it was the margins more than anything else that really hurt the share price. Like dropping, as a 1% margin across the board, including in perpetuity, knocked the 30 euros out of the share price. Or 23 euros, whatever it is. And my target, as I said, was some influenced by what's been happening to BMW in the real world and all the other automobile makers. Like they're all down. None of them are up. No one thinks there's a winner in this trade war on Wall Street today. They're all losers. And that's why everybody's so unhappy. There's no upside here. It's all downside. All right. Well, again, go ahead. Okay. Thanks, everybody. See you guys on Wednesday.
Thank you.